the pensions market is very critical to the Nigerian economy at the moment. Of course, we all know that the contribution is one thing that makes headlines all the time. Trillions of naira. What do you think is the state of that funds? I'm going to start on that note.
Well, thanks for coming back to pensions.
Yes.
I mean, the funds are invested, fully invested in assets. A lot of it is invested in government bonds, corporate bonds, money market instruments of banks, and obviously in listed equities. So the fund is safe. Investment returns are tracking above inflation. Currently, the average 3-year returns is about 13%, which is above inflation number. So the funds are safe and fully invested.
Where are they invested?
Well, the bulk
because
of it
that has been an issue. There have been calls to have some of these funds invested in the equities market. We've seen the volatility, so perhaps that has kept back the decision on that note. But where are these funds right now in the economy?
Well, the bulk of it is invested in government bonds. You know, so typically in early stage of a pension market, the safest instrument tends to be government bonds.
Okay.
And it's very big. The government bond market is very big, and it absorbs a lot of flow. So you have federal government bonds, state bonds, and corporate.
We talked about where. I was trying to find out where are we investing our pensions funds. It's trillions of naira. I think a lot of people out there are interested in where this money are going to. Don't forget, we're having some kind of macroeconomic challenges right now. Some salaries are yet to be paid in some states. States are coming for bailout. And investment is not really at the level that we all want it to be. But so when we have such amount of money somewhere, we all want to know, how is it being used? Where are they invested in?
Well, like I've started to say, it's largely invested in government bonds. Obviously, some are in equities, listed equities. It's government bonds, and also in bank instruments of banks. And, you know, for pension funds, the first thing is safety, security, and obviously returns. On a risk-adjusted basis, you want to beat inflation. And government bond yields are very high. Yeah, for now, it's, you know, it's the best bet for now. But that's obviously going to change with time. At the sector, we're looking at how to invest in the risk sector. But I don't think there's a rush, you know, to push the monies in the risk sector. Remember that this is a contributory pension scheme. It's owned by retail contributors. And our obligation is to have these monies in a form that is, you know, is liquid enough to pay pensions when they're due, but also, more importantly, that generates return to beat inflation and to be able to finance retirement annuities when the workers retire. I
know there are limits in terms of the maximum amount of money that you can invest from the pensions market. Could you just let us into that, into the amount in which you mustn't go beyond in terms of investing in the economy?
Okay, so all the monies are invested in the economy. However, you cannot invest more than 80% of the monies in government bonds. You cannot invest more than 25% of the funds in equities, and not more than 30% in bank deposits. So it's done in such a way there are prudential limits. That means that even if you liked an instrument, you don't go overboard. And I think that currently, even though the maximum allowable in equities is 25%, what we actually have invested on aggregate level is about 12%. And the reasons are quite obvious.
What about the government bonds?
Well, the government bonds...
Because that seems to have more room.
The government bond is about 60%.
So far?
Yes. So there's still a bit of a headroom. However, I know the argument and the discussions are around the equities market and how these pension funds can be used to invest in infrastructure and all of that. And we always say that you need to trade with caution. I mean, you know that the equities market is volatile. I mean, it still represents the best way to make money long term, but you have to pick the companies very carefully. Unfortunately, even though we have more than 220 companies listed on the stock market, you rarely struggle to find about 30 companies that are investable. So we define investable universe as those companies that are well managed, have credible boards, and growing their earnings and can take in pension funds, because we need to provide returns at the end of it. But I think the central theme of pension investing is that this money is not for charity, is not, you know, it's not for social, it's not for welfare. It is really, pension funds are commercial investors, and their remit is to invest those monies and make commercial returns, attractive returns, on a risk-adjusted basis to the owners of the money.
All right. This morning, I have to say thank you for coming on Business Morning. It's been a pleasure speaking with you.
Thank you.
Mr. Dave Uduanu. Mr. Uduanu is the MD at Pensions Alliance Limited, and it looked at the insurance sector alongside with the pensions markets in the country. Earlier on, we spoke with Dr. Yemi Kale, who is a statistician general at the National Bureau of Statistics. We spoke to Tunji Andrews, who is the lead economist at TTAC Africa, where he discussed inflation and the market for the month of August. And earlier on, Rotimi Fakejo actually led us into the market performance for last week and what we are expected to see in this week that we are in. And of course, we're still expecting to see more stocks prices to fall, of course, creating an avenue for investors to cash in and make money in order to increase their investment. And at the interbank market, deductions from the banking system through the NTB OMO auction and the CRR debits are expected to hold this week. And that'll be all here for Business Morning. Thank you so much for spending time with us on the program. We do appreciate it. I am Bolaji Akinwale.